And welcome to Streamlining Insurance, brought to you by the Risk and Insurance Education Alliance, providing a practical advantage at every career stage. I'm your host, Darren Bloomfield, the insurance guy at Feathery. Joining me today is Nick and Charles from Wikifri. How's it going?
Great. Thanks, Darren. Thanks for inviting us, first of all, and hosting this. It's always good to connect and share all of our perspectives in the industry. That is one of the foundations of Wikifri. We're a consulting and advisory firm and also a software provider focused on insurance. We only work with insurance related entities. So that's really our value proposition, is that we know and understand the insurance business. Really, I would put us up against anyone. Our understanding, our knowledge, our experience in terms of how insurance works, how it's processed. We do consulting, we do system integration services. And then I mentioned how we have a software product, and that product is called Insurance Daylight, which is a back office system for an insurance company, a carrier, an MGA. It runs the back office, and a lot of it feeds the downstream functions of those entities. My day-to-day, my role, I'm a co-founder. My role here is business development. So I'm out in the world, which is probably how you found me, Darren, because I go to a lot of conferences. I engage with lots of people in the industry. I also have a weekly newsletter that I publish called Three Things We Learned, which takes a lot of the news from the industry each week and it summarizes it into a pretty digestible email. And I find that a lot of people find value in that because it tells them what's going on, and it really enforces our brand because it shows how we are in the know about what's happening in insurance.
So I'm Charles Sybert, a principal of insurance innovation here at Wikifri. I am leading the SI practice here, which has responsibility for understanding the challenges that each of the clients are trying to solve with the SI tools that we're implementing, and then actually delivering on those promises when we are complete.
Yeah, definitely. Sounds like you guys definitely have very different expertise that just covers like what's necessary to really perform the tasks that like the client needs. And just kind of looking at the background of Wikifri and how the team has kind of moved around together and worked at a couple different companies together. Just something I've noticed, in insurance is that tends to happen very often. I'm sure in a lot of other industries, but just kind of meeting folks that you complement each other's skills well, you work well together, and then kind of sticking together throughout the years. How did that kind of come together, and what do you kind of any advice for anyone kind of looking for like a team, or how do you like recognize that you're on one of these teams now moving forward?
That's a great observation, Darren. Insurance is an industry that's about people, and it is very common to find groups of people that have worked together in different situations, different companies. That is definitely the case here at Wikifri. Myself and Bill Freitag have been working together 20 years. Dan Metz, who's one of our other principals, similarly about 20 years. Charles worked at we had a company before, Agile Technologies. We sold that company to Majesco. Charles joined us there. Charles went off and did some other things and came back. He can tell you more about that. But definitely, I think it's an industry of relationships and referrals. And I think when you find a group of people that you can produce good results with and have success with, it's really important to keep the band together, so to speak. And that's what we've been able to do. And my advice to anybody out there that is looking to have a career in insurance or grow their career in insurance is you attach yourself to the right people, work with the right people, the people that you can feed off of, that can help make you successful, and follow them wherever they go and figure out how to add value together.
I think it's all about as Nick mentioned, it's all about relationships. Even though insurance is a large industry, it's truly a very small community. When you go to the large insurance events like InsurTech in Vegas, yes, there's lots and lots of people there. But every time you go, I meet more and more friends I had known from before. People move around, people evolve, people change, and it's amazing to see and sort of follow along on people's careers. And as Nick mentioned, exactly, just find someone that you find inspiring and attach yourself to them and learn from them and understand how they work and how they function and build that into the way you work and the way you look at the world.
Yeah, no, I definitely agree, and I think as you both mentioned, just creating relationships and really like the rapport just helps. Sometimes it's not just like what company you work at; it's also like who you are at that company. And as you guys said, going to the conferences and Nick with your content creation as well, just like building a brand. In that really kind of helps get over some hurdles. Especially now, kind of in this time of like economic uncertainty, like how has your business kind of been impacted, or any client stories recently of just kind of the stock volatility of the stock market, and any other kind of hesitations with like their a client budget kind of implementing a big project now, where how have you guys kind of used like your relationships and expertise to kind of calm those nerves and move forward?
Yeah, great question. I think in there are it is uncertain times economically. I think if anybody's reading the news or watching the news, it's every day. Tariffs, geopolitical instability, uh, different things like that. I think insurance, fortunately, is a conservative industry and a very solvent industry. They have to be, right, because insurance is is around for when things go wrong, to be able to make people whole and take care of repairing the damage and so forth. So I think I don't have any examples of any of our clients or insurers who have said we are not doing something or we are holding back on spend or budget because of what's happening. I did have a conversation with a friend he was at a client within their venture arm. He's at a new company now, but he said he had been on a panel. I met him at a conference, and he said that somebody asked how the tariffs are impacting his company, and he said they're not, but what's affecting us is uncertainty and seeing what's happening and worrying that there's going to be a meltdown or a recession. We are maybe being a little more cautious about investing, and that's on the venture side, not on the projects, not on the day to day side. But insurance companies are risk averse by nature, so it definitely stands that they would maybe be a little be pausing a little bit in this day and age with the uncertainty that's out there.
Yeah, definitely. I think that's what's interesting, and kind of where you guys play in the space is like, you have the large, very established customers being, the large brokers, large carriers, and then there's also the investor angle of say VC or some PE money maybe coming in trying to make investments, and then also on the other half, I would think maybe a lot of volatility would come with like the vendors and like the startups that are actually offering these solutions. What would you kind of say separates say like early stage startup uh that is able to like scale and get market share versus one that kind of stalls out? What have you kind of seen in that?
Well, I think that insurtech funding has changed a lot. It was a lot easier a few years ago to raise money and to get into later rounds of investment. The last year and a half, it's been a little different, where it's easier to raise seed money. It's harder to go beyond that. So I think what you're seeing where you're seeing the difficulty arise is if a company, for example, raises $5 million, that's only going to sustain the people, the operation, for a certain amount of time, and they have to bring in revenue. and it may be hard to accelerate sales cycles. And if they don't have a good value proposition defined, it will be even harder to make sales happen. And without sales, you run out of money, right? So I think that's the challenge that these vendors face for sure.
No, definitely. I think that's exactly it. Like finding like product market fit. Just at Feathery right now, just what products we roll out and our ability to like find product market fit is, as you said, like you need to generate revenue to actually have a business. So I couldn't agree more there. So just
Yeah.
in in like your approach to kind of, I guess maybe matchmaking, I would maybe call it, between like the vendors and like the clients. What do you kind of do to kind of bridge like that gap of, a client pain point, and then, oh, I know about all these different vendors, what is like the right solution? How do you kind of identify that match?
Well, you take the pain points and then you really try to distill that down into what business problems are we trying to solve. And from there, uh, Charles and our teams, they engage with the clients to start to map out the operating model and the capabilities. And once you have that documented and you understand the operation you're trying to enable, it's that informs the technology vendors that can fit to what capabilities that you need. And so that's at a high level what our approach is. Charles, maybe you want to expand on that.
Definitely. So I think one of the big things to be aware of, like when you mentioned you're starting small, you need to start with your small technology footprint. We don't need this massive policy admin system that does 100 different things. There has to be that balance between technology as well as process. So what are we doing today? What are we doing automated wise? And what are we doing manual? And it's completely okay to be manual. I've seen insurance companies write all their policies and rating completely out of Excel. And that is perfectly fine when you're a small company. But as you grow, you need your technology grows, your process needs to grow. So the thing is, when you look at your technology, you look at your assessments, you want to look at it not just of what we need in the future, but what do we need today, a year from now, 3 years from now, and 5 years from now, and try to align your technology choices, your design choices, your implementation approach to match that venue. We can't drop a 5-year solution into you on the day one and have all this great ability, but it's going to cost you so much money. It puts the company out of business. You want to be able to match the skills and the needs with the funding and the place you're at in your maturity cycle.
So, Darren, we have one of the pillars of our Wikifri business is the insurance business oriented operating model. And this is a framework and a set of templates and tools that we've developed all throughout our 27 years of history with the previous companies and now Wikifri. And what you're looking at is the highest level, the everything picture of what an insurance world could look like. And the process, how we use this framework is it facilitates a process to work with our clients to take them through defining their operation, defining their business processes, and defining the capabilities they need to enable those processes, which again, to my previous in Charles's previous comments, the capabilities really define the technology. And you want to be able to have those capabilities when you go to vendors like Feathery, like policy systems, like underwriting workbenches. You want to be able to hand them a set of capabilities and say, tell me how your software or your technology does enables these capabilities. And if you have that, that's a really good starting point. And then you can plan the roadmap and the implementation from there based on uh, like what Charles says. You don't have to do it all at once. It's okay to do manual things, and while you're implementing the technology, and let the technology come along later.
Yeah, no, it definitely makes a lot of sense. And I think, it comes down to like there has to be a certain amount of pain for the business to change. Essentially, like as what Charles said, at a really small scale, say like 50, 100, 200 employees, whether it be a broker carrier, the need to change the inefficient systems is not as high, say, but say competitors become more efficient, get quotes out faster to their brokers in the carrier side or on the brokerage side. They're able to get better customer service and cut down the insurance buying process with technology to the insured. Then, if they start losing business because they haven't innovated, then that becomes painful. So, and that's why they like have to make that investment. But like, what's kind of the process of getting to the actual decision makers and actually like explaining the need to innovate and the need to like make these investments besides like what other platforms that they currently have.
So I think again, the way to get to the decision makers is to talk tangibly about the business results that the technology is going to help drive. So I think you alluded to this. You want to go to the CEO of the company and say, we're going to be able to process this many more quotes, and that's going to translate to this much more premium that we bind. And that ties into your business strategy that you're going to talk to your board or your investors about, because you have to grow premium by X amount, right? And the technology is going to allow us to save this amount of money on our expense ratio or do things more efficiently. I think that's the conversation you want to have. Charles, please add.
Exactly. And I think one of the things that Nick mentioned, the whole fight, here's the problem we're facing. That is always the toughest part of this entire process. Everyone always tends to have an idea of, oh, here's what my problem is. I think it's going to be problem A. And then the thing is, you have to really look at that and be objective, run it through data, run it through simulations, and evaluate it from a perspective of what is really going on. In the past, I've dealt with some insurance companies where the problem was, I can't get people in the door. Well, the challenge they were actually facing is once they were in the door, the systems and the processes they used were so convoluted and crazy, they lost the customer in the process. So you got to really evaluate what is the problem you're facing and how do we actually solve for it? Is it technology? Is it process? Is it evolution? And just because a competitor is doing it doesn't mean you have to do it. It's all about what makes your insurance company different than everybody else. How do you maintain your competitive advantage? How do you make sure you stay on top of these things and also maintain, obviously, expenses and drive efficiencies? But you also want to make sure you don't lose who you are as a company.
Yeah, definitely. I mean, you don't need to just follow everyone else just because like what one company is doing, depending on line of business or depending on experience or whatnot, human capital, like how many employees they have. Like one solution is not one size fits all. And also, like something I've kind of learned is insurance itself and people in insurance are necessarily like risk adverse by nature, let's say, and then like these investments in technology, could be 100K, 200K, like 300K, like sometimes more, right? And it's like sometimes these implementations don't go well, right? Like sometimes a client or a customer can come in and say like, hey, we spent like 200K implementing this system and now no one uses it and now like it ruined everything else. And like that, let's call it maybe buyer's remorse or like a trauma, maybe like that will be in their mind moving forward. How do you kind of help that person kind of move forward, or what do you kind of recognize with some customer who has kind of like bad past experience like that?
Well, the big thing is to figure out what happened in the past. Again, not to dwell on it. What was it? Was the analysis wrong? Was the understanding of the problem incorrect? Is there something else that occurred that we weren't aware of that impacted this solution? And the big thing is, the past is the past. Let's move into the future and how do we solve for the future? So we want to make sure we learn from our past, learn from our issues and histories and our mistakes, but also how do we evolve that into what the next challenge is? You're still facing challenges, you're still facing issues, you're still facing problems. How do we solve those with light of, that trauma, that issue, that problem that we had before? How do we make sure the next go around is better than the last time?
Yeah, I would add to that by saying business engagement is very important. So if you look at projects that didn't go well, a lot of the cause of that is not having the right business engagement from the very beginning and throughout. And I think also change management and end user acceptance of these solutions is very important. And it's often under invested in, underrepresented in these projects uh, with implementing technology. And so I think change is hard for people, right? And if the rank and file of an insurer is used to doing things a certain way, and all of a sudden they get a system or technology that's going to do it better, I mean, they have to really be helped through the process of adopting it and assisted with the change, because you don't just plug stuff in and let it work. It has to be managed.
Definitely. And then Nick, I just kind of wanted to dive a little deeper on the investing side, say on like the VCs, or say like a reinsurance or a carrier kind of fund investing in AI, or kind of making investments in other companies, trying to like acquire companies. Just wanted to touch more on kind of that due diligence that Wikifri does, as far as the tech ops kind of perspective. What is kind of your process to evaluate like where they need to hire and where they need to invest? Like, is it I'm sure it kind of changes based on what the VC wants and what like the exit kind of is, and what returns looking for. Just kind of wondering the process.
Yeah. So, well, first of all, there's a lot of investment capital flowing into insurance right now. And I think the reason for that is that a lot of the world of capital has woken up and realized that insurance is very stable and it provides very good returns. And so it's an attractive space to invest in. I think Warren Buffett a lot of people started reading what he did, right? So um, what Wikifry does, where we're playing in the space, is we work with a lot of the investors who are buying into the MGA E&S world. And so uh, what we do is we do provide tech ops due diligence, and that is very different from project to project. It really depends on what we're doing, but a lot of most of the investment plays are not just a one-off. They are strategies to acquire one and then another and another and another, and kind of bolt these entities together onto a platform. And so it's very important to, when they're looking to make those investments, to really get under the covers and really do a deep dive into the operations and the technology and the organization that's supporting those things. And we have a whole framework for doing that. And basically, we go through all that and we give the investor a report that gives them a good playbook for how they're going to integrate that operation, and then what technology they're going to be. A lot of times they're getting technology with the acquisition, like the entity that they're acquiring has people and systems. Sometimes they're not getting that technology. They may be carving the entity out of another company, and they have to have a transition services agreement to run the technology. In that case, they have to really use our help to define what is needed on their end to build out the tech and ops to support the business that they're acquiring. And it may not, oftentimes they don't have what they need, and they need to design and implement what they need to really make that acquisition successful.
Yeah, what's kind of like an average, just like timeline? Because just kind of thinking about it, like sometimes they have to move pretty quickly to make an investment, whereas other times, like they might be comparing a few different competitors, or like they might not know. They might be like, "Hey, we've had $15 million. What should we do?" And it's like, well, why would you invest in a broker versus a carrier? Why would you invest in a business that's doing property versus casualty versus professional? Like they might not even know like the variety of options out there. So I'm sure you guys kind of start with like the education, or you really have to meet them where they're at.
Yes, absolutely. Yeah, and I think a lot of investors don't understand these businesses, and so and they don't understand insurance. There's a lot of investors coming in right now that don't necessarily have a background in insurance, and so helping them understand these businesses uh, and how they operate is really important to be able to give them that picture when they're investing. Timing wise, I think that's what you asked about. Usually the deals happen pretty quickly because they're competitive, particularly with MGAs and distribution entities, MGAs, brokers, wholesalers. That has been a trend for some time now, where those entities are sought after by investors, and even there's aggregators like Ryan Specialty and Acrisure, and there's a bunch of MGA platforms now that are buying up these companies, and so those deals go quickly. I think maybe some of the insurtech deals where the investors are really trying to understand the viability, the value proposition. I think those deals may go a little slower and may take longer and aren't necessarily as competitive.
hmm Yeah, that makes sense. And just kind of to wrap up here, what's some key changes you guys have seen kind of in, let's say, like the last 3 to 5 years with AI automation kind of growing more common in its use cases, and also as you touched on the inflow of capital into the insurance industry.
Well, I think AI adoption is increasing. I think you're seeing companies. A year ago, I think it was a buzzword. I think people there was a joke. I put AI in my budget just so I could get it approved, right? Um, I think that's not so much the reality anymore. Now, I think you are seeing companies buy into AI vendors. And again, I think what I've heard, when companies do that, it's because they have a clear value proposition. They know that they're going to process. In fact, I was talking to one recently. They bought into a company that had just raised money that I had not heard of, and I was surprised. Yet another AI vendor, and he said we figured we they know their stuff, they know our business. We bought into them because we figured out that we can process a submission and get it entered into our underwriting system with an AI tool for $1 per submission, and that is a lot. That's a worthwhile price, and we don't have to hire underwriting assistants. So, Charles, maybe you want to jump in and add on that?
I think one of the big changes I've noticed is there's a lot more automation being done. We had RPA for a while. Now AI is now in place, and Nick is completely right. AI used to be a buzzword, and AI was on everything that we went through. Now we're seeing it actually take hold and really provide value for the end user. It no longer is a concept. We're seeing a lot more automation. You just mentioned the automated underwriting processing. Now there's evaluations that go on and scoring before you even look at the process. There's automation on the claim side of the house and across the board. So I think it's really allowing us as an industry to do more and to be more efficient, to allow our team members and resources to really focus on what's important in their world and not the admin kind of activities. I definitely believe that the question in the future is not will we have AI? The question is how are we going to use AI in your job? If you don't use AI and you choose to restrain yourself from it, it's not going to be ending in well because AI can do so much more and so much more capable, but it serves you up as the information to the human to make that decision. It basically is a force multiplier for you.
I also, one more point. We're seeing insurance companies invest in training and upskilling for their associates around AI. So you're starting to see big insurers like name brands putting together funding and putting together uh, facilities and programming for that purpose. And so that's definitely giving AI more legitimacy.
No, yeah, definitely couldn't agree more. Looking forward to seeing how the adoption continues, and that's why we'll be here on Streamlining Insurance to walk everyone through every step of the way. But yeah, no, thanks so much, Nick and Charles, for hopping on here. Thanks for your insight.
Thank you, Darren. Thanks for doing this, and thanks for connecting people and sharing insights. It's very, like we said in the beginning, it's very important. So keep doing it.